Hello, this is Bill Scheid from Applied Finance Research, and in this video we're going to take a look at the effect on system quality number of the optional volatility stops and shorts that we teach as part of our monthly asset allocation systems. If you're not yet familiar with system quality number, or SQN, it's a concept pioneered by Dr. Van Tharp, and it stands for system quality number. And before we jump into the stats, one thing I want to stress here is that the systems we're looking at are examples of configurations of monthly asset allocation systems that I personally trade, but these are by no means the only configurations of these systems, and they're certainly not the only results that are possible. I built these particular configurations of the monthly asset allocation systems to meet my personal trading objectives, but the systems we teach are highly flexible and can be easily customized by each trader or investor so that they meet your objectives. So yes, we do cover these specific configurations of the systems in our courses, but more importantly, we teach students how they can modify and build their own configurations. So with that, let's jump into some of the statistics. So on the left, we've got a back test of one of the momentum-based monthly asset allocation systems that we teach. And on the right, we have the same system, but with the addition of the volatility stops and short positions that we also teach. The back tests go from December of 2007 to July of 2023. So we've got the financial crisis of 2008, the COVID crash of 2020, and everything in between. Just a note on these stats, when we look at maximum drawdown for the volatility stops and shorts, that number is calculated on a month-end basis, while the standard rule set is calculated on a daily basis. So that one metric is not exactly apples to apples between the two systems, but it's enough to give us a bit of insight for our purposes here. So jumping into the numbers, on the left, we see that the standard rule set has an average loss of 3.27%. When we have the volatility stops and shorts, that's decreased to 3.04%. The win rate jumps from 61% to 64%. Profit factor jumps from 1.97 to 2.24. Net gain goes from 71.04R to 84.52R. SQN jumps from 3.31 to 4.05. SQN 100, if you prefer that one, jumps from 2.42 to 2.96. Now, one of the things that Dr. Ken Long says, Dr. Ken Long, by the way, is the person who taught me monthly asset allocation systems to begin with. Dr. Ken Long says that little changes can make a big difference. So while we see that the changes in SQN are not numerically huge from one configuration to the other, when we look at the difference in these bottom line stats, we can see that there's quite a big impact. So the total return jumps from 693.1% to 960%. Maximum drawdown is reduced from 34.3% to 15.7%. Compounded annual growth rate jumps from 14.2 to 16.4. Return to drawdown goes from 20.2 to 61.1. And our ending balance, this is on a hypothetical account, assuming we start with $100,000 and grow at the CAGR for 16 years, right, 2008 to 2023, the ending balance jumps from 838,000 to 1.14 million. So small changes can, in fact, make a really big difference. If you'd like more information on these systems, please visit us at appliedfinanceresearch.com or click any of the links below. Thanks for watching and happy investing.